The Fed is certainly trying to push us into a recession. I'll tell you that much.
If he goes at least 12 months without cutting, I think he is trying to kill the Fed put. I think that's what Jerome Powell is trying to do. He's like, I'm tired of the American citizens losing and Wall Street winning. I think that's what he's trying to do.
When the government owes a lot of debt to foreign countries, or to anybody for that matter, they just take advantage of my inflation-induced debt destruction strategy,
Yep.
right? They inflate away their own debt. So, hey, we owe $1 trillion to China. Okay, if we have 10% inflation in 1 year, 2 years, whatever the time frame, that we get basically $100 billion discount on that debt.
I have the one and only Jason Hartman, Empowered Investors, on the show. This is actually a discussion that many viewers have asked for. So I don't know if you see it on your side, but I get it almost every week. Hey, you need to talk to this guy, Jason Hartman. So thank you for being here.
Hey, it's good to be back, Michael. And I get the same request. I love the stuff you're posting on social media. You're doing a good job out there. So keep it up, and keep exposing people to the realities of this marketplace, because there's a whole slew of them who just don't get it.
Yeah, they want something. It's not fair. It's this, that, or the other thing. And, life certainly is not fair. So, you know what? I want to switch to a topic number 2 with you, if you don't mind.
Sure.
You have a very unique grasp on the economy, in my opinion. I like owning my mistakes. I thought after Silicon Valley Bank crashed, and I was seeing true consumers scared, i.e. conserving cash, I thought Q2 of 2023 would be the start of a recession. I was wrong. I am looking out on the horizon, and I'm not sure that I currently see a recession in the next 12 months. We'll even say 15 months. So we'll say all of 2024. I know a recession's coming because they are a natural part of the economic cycle.
Yep.
So they haven't cured that. It's going to happen. But Jason, when you look in your crystal ball, do you see us heading towards a classic recession sometime between now and the end of 2024?
Well, when you look at what the Fed's doing, it sure looks like we're going to have one. I mean, and look, we can have a recession without having a housing crash. Those are not the same thing, okay?
We've had plenty of recessions.
They could be combined, but not necessarily, right? It depends. So the Fed is certainly trying to push us into a recession. I'll tell you that much. They are trying to increase unemployment. They are trying to slow the economy way down to slow inflation. But given the timing of the election and just all of the other factors, and the fact that inflation has been so stubborn, they've managed to cut it a bit, but it's still pretty sticky. I think this is giving the Fed a little more leeway to try and engineer that wanted soft landing, as it were, right? Sure. If these massive increases, 11 straight rate hikes, or I think we had 11, right?
11 or 12, yeah.
Historic increases in interest rates, right? Normally, the economy probably would have reacted more quickly than it did. And so it's really buying them more time to adjust the leverage.
Well, let's poke at that. In my opinion, what's going on around us is we have a Fed who's clearly trying to put their foot on the brake.
Right.
But we have Congress who are put their foot on the gas, right? All of these Inflation Reduction Act and all these other spending plans. I mean, I got to imagine Jerome Powell's going, what the hell? Help me out here, guys.
Yeah.
Because it's an interesting battle.
Yeah. Yeah, it really is. I think what they'll do is as soon as we move into recession territory, if not before that, they're going to pivot, because the problem they have is pretty serious. They can push more banks into failure mode because these banks, it's really the Silicon Valley Bank story, right? These banks have these hold to maturity assets, and some of those not all of them. They were all purchased at different times, so it's a laddered effect, right?
Hmm.
But some of those are costing the bank a fortune, and they're making
Sure.
the banks insolvent or pushing them in that direction. So the
Yeah.
longer they keep the rates up, the bigger that problem becomes. So they got to
Hmm.
be careful of that. And just generally speaking, in addition to inflation and the Phillips curve, which is the relationship of unemployment to inflation, as they've also got to worry about the cost of their own debt, the government's
Yeah.
debt. Okay.
Stacking up an
It
interest
is,
charge. Yeah.
I mean, they don't want super high interest rates because it just costs them more money. So the
Yeah.
powers that be, you know, they want to see rates calm down a little bit too. And I think they'll sell out the American people and just let inflation be the problem, because it's the easy part of the business plan. And it's really,
Yeah.
Michael, a good business plan for the government, because
Yeah.
when the government owes a lot of debt to foreign countries or to anybody for that matter, they just take advantage of my inflation-induced debt destruction strategy,
Yep.
right? They
Hmm.
they inflate away their own debt. So, hey, we owe $1 trillion to China. Okay, if we have 10% inflation in 1 year, 2 years, whatever the time frame, that we get basically $100 billion discount on that debt because we
Right.
we borrowed it at yesterday's dollars, but we pay it back in tomorrow's cheaper dollars. So
Right.
that's a very good deal.
Yeah. It's funny. I created a shirt in 2020 that says, "I use inflation to get rich. Ask me how."
Yeah, that's
And
a good shirt. I wish I
yeah,
would have thought of that. Yeah,
there you go. Yeah. So again, I got to tell you, inflation's a feature, not a bug. That's another
yeah,
thing I'm starting to say. It's like,
good
guys,
point.
it's part of the system.
Yep.
It's really funny when I go back and look at the Fed. I think Jerome Powell is trying to do something. I called this a year ago. I think I've heard Danielle DiMartino Booth say it once or twice. I'm curious what you think about it. I think Jerome Powell is trying to kill the Fed put first introduced by Alan Greenspan.
Hmm. Interesting.
And by killing the Fed put, what does that mean?
Yep.
In my opinion, these are my words, not yours. Alan Greenspan basically allowed Wall Street to run amok, stack up leverage, because if they won, they won. And if they lost, they got bailed out
Yep.
by the American people.
Corporate socialism. Yeah.
I hate it. It's horrible. If
Oh,
if
it's
if
terrible.
you
Yeah.
make a bet in capitalism and you lose, pay the price, right?
Yep.
If you win,
Absolutely.
congrats.
Yeah.
That's how I roll. I do believe if you gave Jerome Powell true serum, I don't think Jerome Powell is saying I want to raise unemployment to bring inflation down. I think, again, I go back to Jackson Hole, not this year, the last year, where he basically came out in 8 minutes and said, I'm going to kick you illiquid billionaires in the nuts. The market's not listening to me. Hear me now, going higher for longer. And you've seen folks like, I call him billionaire Barry Sternlicht, whose mortgage company, BK, stopped distributions. He's selling assets to raise cash. I think Jerome Powell's main thing is he wants to kill the Fed put.
Yep. Maybe, he certainly is acting like Paul Volcker, I'll tell you that much. And it's kind of surprising because it wasn't too long ago that he was letting inflation run amok. It was
He was Arthur
transitory.
Burns times 10.
Totally.
Yes.
Or Greenspan. Greenspan was like
Oh,
that too. Or Bernanke, Helicopter Ben. I mean, but yeah, he has become Paul Volcker, and I can't believe how aggressive, how hawkish he's been. But I think it's overkill. I got to tell you, he's going to have to pivot. There's just no choice.
Well, let's play with that because my current thinking is we're done raising rates. We're not going to get a bump in September. We're not going to get a bump the rest of the year.
Yeah, I thought
And
that the last couple times, and I was wrong. So,
yeah, and here's the thing that I think you and I will disagree on, which is totally okay. I don't think he cuts next year. I think
wow.
we have these rates for 18 months, which will
Mhm.
be the longest on record.
Yeah.
I realize that the current longest on record is 12 months, so I'm going 50% over the longest to date, which puts me out on a pretty skinny limb. I get
Yep.
it.
Yep.
But, if he goes at least 12 months without cutting, I think he is trying to kill the Fed put. I think that's what Jerome Powell is trying to do. He's like, I'm tired of the American citizens losing and Wall Street winning. I think that's what he's trying to do.
Well, I hope so because it is very much not fair, and I gotta make a book recommendation here.
Okay.
You'll love this book if you haven't read it already. I'm actually listening to the audio right now, and it's so good. And all of your listeners should check this one out too, because Wall Street, as I've long said, is the modern version of organized crime. It
Absolutely.
really is. It's just such a criminal enterprise.
It's
The
a
book,
legal casino. Yes, yes,
yep,
absolutely.
totally. The book is called A Capitalist Lament: How
Oh,
Wall Street is Fleecing You. Okay.
I have not seen that.
And this is the cover of the book. Okay. So
Hmm.
it's that red cover right there.
Yep.
Okay.
Gotcha. Yep.
So yeah, it's really quite good. Leland Faust is the author, and
Leland.
it's excellent.
I will check that out. Thank you for the recommendation.
Yeah.
But yeah, when I look at what's going on, I think Powell uh, I think Powell is out to save his reputation. I think 12 months ago he was the inflation is transitory, and he would have been written in the history books in a very negative light, almost comical.
Yeah.
I think he's turned some of that around. Right,
Hmm.
he has brought inflation down from 9.1 to 3.3 CPI headline. He has more work to do.
Yep.
I think he wants to go down as Paul Volcker 2.0, and probably more importantly, is the guy that broke the Fed put. And if he does, that'll be something.
Yeah, well, that's very interesting. I mean, we'll see. Yeah, I just
So
don't
you
know.
think a cut's coming then? So again, we disagree on that. It's totally okay.
Maybe I'm just being hopeful. I don't know. Look,
Sure.
my
None of us do.
predictions for the past 19 years that I've been doing podcasts and conferences and so forth on the speaking circuit. I mean, my predictions have been pretty good, but one has been horrible, and that is interest rates. I suck at predicting interest rates, and I should just stop commenting on it and just say no
Fair
comment
enough.
because
Sure.
it's look, I want to believe that interest rates respond to market forces, and the reality is
Sure.
they just don't. We live in a centrally planned economy where the Fed is running things, and they have different,
Hmm.
the Fed is not Mr. Market. I can understand. Okay.
Right.
You
Sure.
understand market forces, market dynamics. That's doesn't seem that hard, at least for me. But authoritarian central planning
Yeah.
is at the whims of the central planners, their political
Yes.
motivations, their
17
legacy.
people. Yeah.
Yeah, it's just
Yeah.
I don't know. Yeah,
Yeah. It is certainly, I guess, more psychology,
yeah.
right? You've got to figure out, what their motivations are, and you can see. So it is very interesting. Well, let's talk about economy. Again, I think we both could agree with certainty that a recession is coming sometime in the future. I don't think that's
At some time for sure.
yeah, no, at some time. No, I mean they're part of the system, right? We haven't defeated
Hey, I'll go
recessions.
further than that. I'll say a depression is coming
There you
sometime.
go.
Yeah.
At some time. But when again you look at your crystal ball and you think just as far as 2024, so
Yeah.
about 16, 17 months from now,
Yeah. I think
thoughts?
inflation is going to be an ongoing problem. Another book, actually a book that I'm actually reading, a good old paper book. I don't have it here, it's up in my bedroom, but it's called When the Boomers Bail. And it's
Hmm.
just interesting. The thesis of this book that was written approximately 2007, I want to say, is interesting. It's just about how the boomers didn't have enough children,
Hmm.
and there's a worker shortage. And I think that's one of the reasons unemployment is being so stubborn. As much as the Fed is trying to put people out of a job,
Of course.
there's just not enough skilled workers, and there's not enough actually unskilled workers either. Uh,
You're
you know,
both absolutely right. Yes.
I mean, vocational schools. Trump was really big on that, and I think that's a good thing. Amazingly, a lot of plumbers make more than lawyers, and that's
Hmm.
probably as it should be, actually.
Yeah. It works for me.
Yeah,
Yeah, no, I think the job market is pretty fascinating, right? The JOLTS report came out the other day, right? We've now under 8 million. We were as high as nearly 11. So we're down 3 million openings. That's good. We saw jobs growth last month and the unemployment rate go up, which I know shocks a lot of people. Like, how can that be? Well, it's called the participation rate. We
right.
got 1 in 6 retirees thinking about coming back to work either because they want to or probably because they have to.
Right.
It's just it's an interesting economy and labor market.
So, one of the interesting things the author said in that book is he said, if you have a business, anybody you will hire in your business in the next 25 years has already been born.
Wow.
Just let
Okay.
that comment sit for a moment and really ponder that over the next day or so. That means that there is such a tight worker shortage that you are going to have a lot of upward pressure on wages. Throughout history, okay, and look, Karl Marx became, I think, as much as I don't like Karl Marx, obviously, but he really is the most influential economist in history, in my opinion, okay? Not for in a good way, okay? But the whole battle throughout history has always been between capital and labor. Who gets more in the equation, right? There's capital because you got to build the factory and supply the machines and the equipment and whatever. You got to open the business. That's the capital, right? The labor are the workers who work there, right? Who's entitled to how much, right? And I would argue, and at the risk of sounding like a socialist, that the pendulum has swung too far in favor of capital. And
totally agree.
And I'm saying that as a high net worth person who has the capital, okay, and hires lots of workers. But I think that pendulum has really swung too far in our favor. And if you look at CEO pay versus compared to the pay of rank and file people, CEO pay used to be like 25, 30 times what the rank and file employees get. And now it's over 300 times. Yes. So it's absurdly out of balance. And, labor really does need more power in that equation. And I think they're going to get it just by demographics because there's so few of them. Too.
I agree. I'm actually on record on my daily financial show trying to get people to understand that I think labor is going to win. We saw this with the UPS strike. You're going to probably see with UAW. Labor is winning. Labor should be winning. I think they've been mistreated for 40 years, not since the 70s has labor gotten their fair share.
Right.
It's coming. And to tie this all the way back to episode
what does that
number
mean?
1.
Let's just extend that one more thing, Michael. Okay.
Sure.
That means inflation. Okay.
Well, it means one of two things.
Yeah.
Inflation, or they're going to eat margin and pay less to shareholders. There are 3 ways that can be done. And I think it's going to be all 3 of those. It doesn't have to only be inflation. They can eat less margin and they could pay less distributions, capital back to investors. I'm certain labor is going to win. I think the stock market could be a lost decade or very low return, certainly below trend. And I think some of that rolls into inflation. So I think it's all 3 things happening.
Just remember, though, that wage inflation is very sticky.
Absolutely.
People usually don't take pay cuts very well.
No,
and
not very well.
And so that inflation, that as people get more dollars and spend them into the economy, that just means the price of everything increases, including real estate and including rent and including the devaluation of debt through inflation-induced debt destruction, which is all good for investors.
Absolutely.
As much of it may not be philosophically good, it's good for you as an income property investor.
Yeah. And then the last thing is I go back to how do you fix the housing market? My answer, kind of tying these 2 episodes together, is labor is winning. So you're going to see the bottom 50% of wage earners get a disproportionate growth in wages. That is going to make housing affordable slowly over time. We're going to have a sideways market for 3 to 5 years at least, and no crash on the horizon. Jason, where can people find you and see all the things you're doing?
JasonHartman.com is my main website. That's JasonHartman.com. Of course, my podcast is available on all the podcast platforms. Just type Jason Hartman, and my YouTube channel as well. And Michael, it's so good to talk to you. I love talking to knowledgeable people who really get it, because there are so many hacks out there who are just clickbait and shallow knowledge, and you have deep knowledge. So I love talking to you.
Thank you, man. I appreciate it. Guys, if you would like to see Jason and I talk more, leave some comments below. Also, you know what? Give us some questions you would like the 2 of us to debate and talk about. Jason, man, thank you for all you do. Have a wonderful day, all right?
All right. Happy investing.
Thanks.